Salesforce just processed 28.6 trillion AI tokens in a single quarter. How is that even possible? And more importantly, what does it mean for the future of work?
I mean, it's a staggering place to start, honestly.
Right. Welcome, and thank you so much for coming to watch this video. Today, we're unpacking the Salesforce Fiscal 2027 Q1 earnings call, and we're skipping all the dense corporate jargon to extract exactly how this new agentic era is transforming business right now.
Yeah, and that number you mentioned, the 28.6 trillion tokens, it really sets the stage.
It's massive. But for anyone who might not live in the weeds of AI, what does that actually look like?
Well, a token is roughly equivalent to a syllable or maybe a fraction of a word. It's the fundamental unit of data a large language model processes.
Okay, so a fraction of a word.
Exactly. So processing nearly 30 trillion of them in 3 months. We are talking about an absolute ocean of computational power, thousands of GPUs running at maximum capacity, just constantly generating insights and executing commands. It's a fundamental shift in how enterprise software operates.
Wow. And to really understand the analyst questions later, we first have to understand the massive numbers Salesforce dropped in their opening remarks. Yeah. They really came out swinging.
They absolutely did.
I mean, Q1 revenue hit $11.13 billion.
Which is up 13% year over year. But honestly, the metric that really stands out is their profitability.
Right.
Their non-GAAP operating margin surged to 34.8%.
Almost 35% margin. That's insane.
It really is. In the software industry, balancing double-digit growth with a margin that high is incredibly difficult, especially when you're actively building out, extremely expensive AI infrastructure.
Yeah, that compute is not cheap.
Not at all. And their earnings per share blew past expectations to land at $3.88.
Plus, they executed this massive $25 billion accelerated share repurchase.
Yes, that is a huge move. They took half of their $50 billion share repurchase authorization and just deployed it aggressively.
Reducing their outstanding share count by a full 10%.
Right. And taking 10% of your own stock off the market, that's one of the loudest signals a management team can send. They're essentially saying, their own stock is the best possible investment they can make. And they back that up by raising their full-year revenue guidance to a range of $45.9 to $46.2 billion.
Okay, but here's where it gets really interesting. Because the story isn't just that they're generating more revenue, it's the mechanism of how they're doing it.
The Agentic Era.
Exactly. They introduced this Agentforce platform, and Agentforce annual recurring revenue has already surpassed $1 billion.
Which, crossing $1 billion for a relatively new product category is a massive milestone. But the volume metric is even crazier. They delivered 3.8 billion agentic work units in Q1.
Wait, 3.8 billion?
Yeah, up 111% just from the previous quarter.
Okay, let's pause. What is an agentic work unit? Because I think a lot of people hear AI and just picture a chatbot writing an email.
Right, yeah. But an agentic work unit, or AWU, it's not just a query. It's a completed, multi-step business task that the AI executes autonomously.
Like an actual workflow.
Exactly. They shared a few customer stories that really ground this, like take PenFed Credit Union. They're running 76 different AI agents right now.
Oh, wow.
And their CEO highlighted this deployment called Agent Wingman. It's saving them $1.6 million, cutting call handle times by 10%, and basically creating what he called bionic employees.
Bionic employees. I love that framing.
Yeah.
And then there was UCLA Health, right?
Yeah. They're using Agentforce as a virtual concierge for about 450 patients a day, finding providers, managing general inquiries, things like that.
Which is wild because healthcare is usually so heavily regulated and slow to adopt this stuff.
Absolutely. But the wildest example was definitely Vivino.
Oh, the wine app. Yeah, I use that all the time.
Most people do. They're supporting 74 million users right now, and their AI agent handling order status and slashes resolution time by 70%, which means they're supporting 74 million users with just 37 human customer service reps.
Okay, wait a second. 37 human reps for 74 million users. Let's unpack this. Because if I hear that ratio, I am instantly panicking about my job.
Oh, for sure.
I mean, are these human jobs just disappearing?
It's the most logical fear, right? But the PenFed CEO's sentiment actually counters that. They aren't losing employees. They're scaling volume at an industrialized level, but with the exact same headcount.
So they aren't firing people?
No. The human is still firmly in the loop.
Yeah.
The AI agents just handle the tedious stuff, summarizing accounts, routine lookups. So the humans are freed up for actual knowledge work, empathy, building trust, handling complex edge cases.
So it's scaling volume without scaling headcount,
Exactly.
which is a perfect transition because that dynamic is exactly what we're about to dive into with the Q&A session, where the executives explain this brand new headless strategy that fundamentally changes how we use software.
It really gets into the weeds of how they pull this off.
Right. But real quick, if you're finding these insights valuable so far, please take a quick second to click like, share the video, and subscribe so you don't miss our upcoming content. Okay, let's break down this Q&A.
Let's do it.
First up, we had Brent Phil from Jefferies, and his question was essentially challenging the whole narrative. He asked, what are the actual signals from the customer pipeline regarding this AI-led transformation?
Yeah, he wanted to know if this was just hype.
Right. So how did they respond?
CEO Mark Benioff took that one. He explained that Agentforce is basically replacing the traditional Salesforce search bar. Instead of a user just searching and clicking links, the AI acts autonomously.
Oh, interesting. So it's doing the work for you.
Exactly. And the numbers back it up. They've already handled 4 million autonomous service transactions, and in Q1, they automatically worked 220,000 sales leads.
Wait, the AI worked the leads?
Yes. And it generated $42 million in actual pipeline.
That is massive. Okay, so question 2. This was from Keith. His firm wasn't stated on the transcript, but he brought up a good point. Where does the confidence for second-half revenue acceleration come from? Because recent bookings have kind of lagged, and there's some softness in Tableau and Commerce Cloud.
Right. It's the multi-billion-dollar question. Robin Washington and Miguel Milano answered this. They noted that their CRPO, which is their current remaining performance obligation, is very strong.
Basically contracted revenue that's on the books.
Exactly. And their net new annual order value, or AOV, is actually outpacing standard AOV growth. The top 10 deals grew 60% in total contract value.
60%.
Yeah. And they're monetizing AI in 3 distinct ways: upgrading existing seats, finding new pockets of users because the ROI is just so much higher now, and selling flex credits.
Flex credits. Let's explain that because it's a huge shift. You buy the software, but you consume flex credits to run those autonomous agents. It's literally like putting gas in a car.
Exactly. The more automated value a customer gets, the more credits they burn, and Salesforce captures that revenue.
Which leads us right to question 3 from Gabriella. Again, no firm stated for her. She asked about this Headless 360 strategy. How does it protect Salesforce from downside risks? Like, if customers build in-house, aren't they just abstracting value away from Salesforce?
That's the classic platform lock-in debate, right?
Yeah. Okay, let's unpack this headless concept.
Yeah.
Think of Headless 360 like a restaurant where Salesforce is the kitchen. But you don't have to eat in their dining room. You can order and get the food anywhere.
I love that analogy. And they do this using MCP, or Model Context Protocol servers. It means external coding agents like Claude or platforms like Slack can pull data directly from Salesforce.
Without anyone actually logging into salesforce.com.
Precisely. And they argued this doesn't abstract value, it drives it. They pointed out that Anthropic's usage of Salesforce actually exploded 5x, specifically because of this headless access.
5 times more usage just because they made it headless.
Because it removes the friction. The data is just there wherever the developer is working.
Okay, question 4 from Brad Zelnick at Deutsche Bank. This is the big one. How is Salesforce translating this massive token consumption, that 28.6 trillion tokens, into revenue, and how are gross margins staying intact with all these compute costs?
Compute costs are usually the margin killer, yeah. But they use this customer zero playbook. They're basically absorbing token costs without margin degradation because AI coding tools are making their own internal engineers incredibly efficient.
Right. They mentioned they've kept engineering headcount flat for 2 years, but doubled the code shipped.
Which is staggering. Flat headcount, double the output. That's how they absorb the costs. And for monetization, it comes over time through that consumption model. Customers are spending 1.5 times more as they adopt these agents.
It's just wild efficiency.
Yeah.
Okay, last question. Number 5, Kirk Materne from Evercore ISI. He asked, can Slack act as a gateway for broader agentic adoption across the customer base?
Oh, they were so hyped about this question. They confirmed Slack is an absolute rocket ship. It represented nearly half of their $1 million-plus wins this quarter.
Half. And they called it a multiplayer collaborative platform.
Yes. Where humans and agents work side by side. In Q1 alone, 3 million custom apps were built on Slack, including 250,000 AI agents,
And Slackbot is driving 3.8 million hours of internal productivity gains.
which puts Slack on a trajectory to potentially become a $10 billion cloud for them.
That is just incredible. So if we connect this to the bigger picture, pulling back from the individual analyst questions to the macro view,
Yeah.
what are the main themes here?
Well, there are really three massive things. First, the shift to agentic UI. Software is moving away from logging into discrete apps. You're not going to have 20 tabs open anymore. It's moving toward conversational, autonomous agents that just do the work across platforms in the background.
Right, a total shift in how we interface with computers.
Exactly. The second theme is the headless ecosystem. By opening up trillions of API calls, they aren't locking customers in. They are embedding themselves into every other AI tool on the market.
The kitchen is open to every delivery app, basically.
Perfect way to put it. And the third is operational excellence. This customer zero strategy proves AI isn't just something they sell, it's the internal engine keeping their operating margins incredibly high without massive hiring.
So they're drinking their own champagne, and it's working beautifully.
It really is. And it leaves us with something pretty profound to think about. Mark Benioff mentioned that in 2 years, just 2 years, there will be more autonomous agents using Slack than actual human beings.
Wow, more AI agents than humans on Slack.
Yeah. So if your company's primary communicators are soon going to be AI agents talking to other AI agents, what does your future organizational chart even look like?
That is a wild thought to leave on. Thank you so much for watching this deep dive. If you're finding these insights valuable, please take a second to click like, share the video, subscribe, and stay tuned for our upcoming content. See you next time.